Hey, this is Sheriff the Burger. Today, our subject is property taxes and expenses starting from buying process to the selling process. Because every country has their own system about it, it is quite possible to face different tax payments. So we collect every possible tax payment of your property. Here comes the boring video, taxes in Turkey. The first tax shows up while buying. On this issue, there is 4% title deed tax in total, which is shared with the seller equally 2% by 2%. After this, there are value-added taxes in the sale price. Of course, the rate of value-added taxes are 1% for smaller than 150 square meter, 8% for bigger than 150, and 18% for commercial properties. There can be small changes on the rates from town to town, but as a foreigner you can be exempt from these rates. To be exempt from these rates, money has to come from outside of Turkey, of course not to have residence permit in Turkey, and not to stay in Turkey more than 100 days in a year. As a final requirement, you need to buy from a developer. You cannot deduct to the exemption amount if you are purchasing second-hand property. When you provide all these required situations, you need to prove them with documents. Money transfer receipt, showing that money comes from outside, getting a document which shows you don't have residence permit in Turkey from the Department of Immigration, going to General Directorate of Security with the copy of your passport page and getting a document which shows you don't stay more than 100 days in a year. These institutions are side by side located in Fatih, so it is very simple to handle quickly. No need to prove any document that you are buying from developer, investigating without asking to the document. There is no property exemption limit, you can get as much as you need, but it should be obtained separately for each property. This is important. You cannot apply for exemption with only one exemption document. Besides, if you have Turkish citizenship, you cannot benefit from the exemption. To make it easier, someone who is an expert on this issue, like a lawyer or us, will be more helpful for a proper process. Anyway, if you have time and effort, you can run your process as well. On the other hand, you will also be responsible for some expenses during the buying phase. So, what are these expenses? These expenses may change depending on the property you buy and the service you get in the process, but there is an approximate cost for each of them. Some of them are mandatory payments which you should pay, but some of them are not necessary if you are running your own process. So, mandatory expenses issued in the buying process are title deed, office capital, circulating tax that we calculate, döner sarmaya, takes around $200 to $300. Real estate valuation report, $200 to $300. Document translation, $20 to $30. Earthquake insurance, DASK. And there are also optional expenses. The payment for power of attorney to notary. If you don't give power of attorney and run your own buying process, you don't need to cooperate with one of the certificated translators shared by the title deed office, which is $200 to $300. Lawyer fee, which is approximately $1,000, and more or less this process will cost around almost $2,000 in total. Besides, after buying property, you will be responsible for maintenance fee of your property properly. We cannot give a certain amount for it because this payment is very low at some properties, while it may reach striking amounts on the top luxury project. You pay maintenance fee as long as you hold the property without renting, but it's paid by the tenant once you rent the property. Except for maintenance fee, all these expenses and taxes are paid once. Then real estate tax starts 1 year later. Turkish real estate tax system offers a unique opportunity to foreigners by giving 1 year gap without real estate tax payment, which means your real estate tax starts 1 year later. Real estate tax is always a main subject because it's related to a great number of people. It's constant tax as well as it has a changeable extent and calculation. Even if some countries such as England and Italy apply stereotypical methods dividing properties into certain category types, in Turkey the real estate tax for each property is determined separately. The main reason is that each property has a specific value, so that it's required to calculate each property separately. Another reason is economic fluctuations on the property prices, either positively or negatively depending on surrounding features. Also, increasing Turkish population each year and rushing of both local and foreign people into big cities such as Istanbul, where the city has approximately 20 million population, bring new construction activities and constant sales. That's why capital appreciation of the properties, either in old towns or newly made settlements, grow up all the time. There can be even increasing value between one. In this perspective, property valuation is more important than the European countries. According to Emlak Vergi Kanunu, real estate tax law, valuation is repeated once in every 4 years. Since 4-year valuation will not show true result in the big cities where property capital appreciation grows very fast, the Minister of Treasury and Finance determines an average valuation rate each year, and real estate taxes increase depending on half of this valuation rate. With these aspects, real estate tax system is familiar with the Great Britain. Despite low inflation rate valuation in Great Britain, which is repeated once in every 5 years, are updated according to the inflation rate until the next value determination. Real estate tax in Turkey is the general term of 3 sub-property taxes, including building property tax and 2 different types of land taxes as arsa and arazi. Arazi is a place where its hugeness is parceled by the local management to organize a settlement, which means arsa, type empty land, is close to the city, while arazi is more deserted field. These terms can be seen unfamiliar to you because each country, each nation applies its own system. As we see in many other subjects, real estate taxes, types and regulations change from country to country. Let's dig into more. Depending on what kind of investment you prefer, the rates of real estate tax are different. If your purpose is to make a property investment, the current rate is 0.1% for residential units and 0.2% for other building types. These rates get double in the big city of Turkey. Officially, there are 30 big cities issued by the government, which means their population is more than 700,000 people. So Istanbul, Ankara, Antalya, Trabzon, Bursa and west coast of Turkey and the other big cities, the rate of 0.2% for residential and 0.4% for other building types. On the other hand, rates are 0.2% for arsa and 0.4% for arazi in the big cities. But foreigners are not allowed to make an arazi investment, while you can make arsa investment. If you want to invest in an arazi property, setting up a company with Turkish identity is a must. To learn more about land investment and the steps of setting up a company in Turkey, don't forget to watch one of my previous videos of Sheriff the Broker, how to set up a company in Turkey. For example, when you purchase a property, $250,000 or a group of property to apply for Turkish citizenship without calculating exterior features of the property, such as view and location, the core price is only $500 per year. The real estate tax is paid in 2 pieces, which means $250 every 6 months. In this way, you can get a Turkish passport, good rental returns and many properties in Turkey. It's nothing when compared to beneficial sides of income. Normally, it should be registered by the property owners, and to register you need to claim your property to the real estate department of the municipality where your property belongs to. It's a compulsory process. You don't pay any real estate tax in the first year of declaration. Your tax starts from the second year directly. So the first year declaration is the legal period, but Turkey offers a privilege on this issue. Municipality makes it start on behalf of you with a small penalty after a year. The only documents for making a declaration are your title deed, the copy and translation of your passport. If you apply for Turkish citizenship and it's approved by the government, you can do the same process with your title deed and Turkish identity card as well. There is no fee for declaration. It's paid in 2 pieces, which are May for the first payment and November for the second payment. In case you don't pay real estate tax on time, 1.6% default interest is added each month on your real estate tax amount. As you can pay directly from the municipality, you can also pay your real estate tax online through the bank account of the municipality. Many factors are affecting the real estate tax of a property. While determining a tax value, building type and class, proximity to business and living centers, and facilities such as parks, schools and hospitals, in addition to transportation networks, its position to the scarce coasts, main streets, availability of electricity, gas and water infrastructures, size, the number of floors, rooms, bathrooms, its facade, availability of elevator, central heating system and air conditioning and its view are taken into consideration. There are plenty of valuation types based on property price, cost price or the amount of average income. Among them, property price plays a prioritized role according to property price model. Recent sales of apartments which have the same features in the neighborhood determine your property value. This is the main Turkish valuation model in case of not being apartments with the same features. Then apartments with similar features are taken into consideration with some additional or discount amounts depending on the difference between your apartment and the related one. You can also use same method while renting your property. If you rent your property, paying rental income tax is must in Turkey. But how much? Let's see. Some additional taxes are applied to your rental income. So the rental income taxes of 2021 is listing like up to 24,000 Turkish lira, 15%, 24 to 53,000, 20%, 53 to 130,000, 27%, 130 to 650,000, 35%, over 650,000 Turkish lira income, 40%. These rates are made yearly basis. That's why you need to follow upcoming updates each year. Before buying your property, it's also easy to calculate beforehand and seeing how much you will pay is going to be better for you. While calculating your rental income tax, the amount of exemption cannot be ignored. 2021 exemption amount is 7,000 Turkish lira, which means no matter how much you earn from your properties, it can be a single property or a group of property, you need to deduct this amount from your total income in a year. The exemption is only valid for residential properties and used only once for your whole rental income while calculating. These exemptions have also been updated each year. That's why you can follow it from the related department of public website of the government that I also shared a link on the description. The comprehend clearly, let's see it an example. For example, you are earning 27,000 Turkish lira rental income from your properties yearly. First of all, the exemption amount is deducted from your rental income, which is 27,000 minus 7,000, 20,000. This is the amount of what income tax can be applied. After the exemption, let's remember the rates. 20,000 is found at the rate of 15%. So your rental income tax can be simply found by multiplying your remaining amount with the rate of 15%. Basically, the result will be 3,000 Turkish lira rental income tax yearly. 20,000 multiplied by 15% is 3,000 Turkish lira. As you can pay this amount at once, you can also divide into two payments, once in March and the other in July. Is there any tax while selling? 22% capital gains tax is applied if you want to sell your property in 5 years. But if you sell your property 5 years later after purchasing, then this 22% capital gains tax is not paid, which means you don't pay tax at all. Finally, the last one is about inheritance. Inheritance tax is paid by the heirs if property owner passes away. The rate of inheritance tax is 13% in total, which we don't expect you to die. So there are two things that you cannot escape in your life. One is death, one is taxes. Today we talk about taxes. I don't want to talk about the death. So that's all what I tell about property taxes. It was a pretty long row, but hopefully these pieces of information will be very helpful during buying stage, living and selling periods. These are the whole taxes about real estate. So see you on the next videos. If you have any questions, please comment under the video. I'm very happy to answer. Don't forget to subscribe to my channel. See you on the next ones. The broker is out.